Well, good morning, everyone. Good morning. Happy Monday morning. It is October 7th, 2024. It is so good to see you all this beautiful Monday morning here in Austin, Texas. Thank you all so very much for taking your precious time to join us for our Monday morning touch point. Lots to go over this morning. It's going to be a very important week. We've got inflation data coming out later on this week. We're going to go over the economic calendar, take a look at the bond market, look at inventory, but of course, we are here to start our new listing to pending ratio, the single best leading market indicator available for the entire MLS, to see what's going on with the market. How is activity in relation to rates going up a little bit? Let us make the absolute best use of our time today. And let's go ahead and hit it hard, you all. New listing to pending ratio. Let me go ahead and get this screen up and running for you. As you know, the first thing we're going to do is we're going to go backwards in time a little bit, and we're going to update the previous week because we know that agents are really bad when it comes to updating information on the MLS. So we're going to have to see how many agents are a little bit behind on updating their pending properties. So we're going to go back to September 23rd all the way through September 30th. Keep in mind that we are focused on residential for the 6-county area. The 6 counties that we track on this specific spreadsheet is Travis, Williamson, Bastrop, Hayes, Caldwell, along with Burnett counties. We're going to take a look at pending from September 23rd all the way through September 30th. And we're going to change this 461 number up to 471. That's going to give us a ratio of 0.83 from 2 weeks ago, which is not bad. That's a good ratio. I'm really excited to see that ratio go from the 0.7s to the 0.8. Now, let me do a really quick recap on what this ratio means and why I am obsessed with this ratio. It is a leading market indicator. It shows us what went under contract in relation to what came on the market as a new property and a back on the market. So if 1,000 properties come on the market, new and back on the market, and 830 leave the market, that means it goes under contract, you're going to get that 0.83 ratio. If you've got a ratio of 1.2, that means that 1,000 properties came on the market and 1,200 properties left the market, which means that we're going to draw from inventory. If you consistently have a ratio under 0.9, under 0.8, that means that over time inventory is going to increase. If you've got a ratio that is under that 0.7, inventory is going to increase at a tangible rate. A ratio under 0.6, I like to classify that as a substantial rate. Inventory is going to explode. A ratio under 0.5, anything with a 0.5, that basically means the market is collapsing. That's what that means. So it is encouraging to see a ratio of 0.83 for 2 weeks ago. Now that we've updated that, let me go ahead and just start updating this week. Keep in mind that at 11:59 p.m. today, new price increase, price drop, back on the market, active under contract will lock. So when I update this resource tomorrow morning, all of this information will lock, and then we will update the pending for the next few weeks. In saying that, let us update the previous week, 16th through the 23rd. That's going to go up to 483. Let us update from the 9th to the 16th, and that's going to be 522. So great, we don't have to update anything before that. Now, let us start updating this past 7-day period. That's going to be from the 30th all the way through today. Reminder, tomorrow morning when I email you the updated new listing to pending ratio, this field will be locked. Last week, we had 948 new listings hit the market. What do you all think, you all? Less or more than last week? What do you think? Less or more? Now, keep in mind, we're going to continue to get new listings between now 10:06 a.m. and 11:59 p.m. tonight. But from The 30th to right now, what do you think? Do you think listings have more new listings compared to last week or less? What do you think? Less, more? Okay, we've got a mixed bag. Y'all, we're already at 950. We are already at 950 new listings. We've already beaten last week. We are very close to the week before. We had 1,085 from September 9th through September 16th. We almost beat September 2nd through September 9th. Easily beat pretty much all of August. So we are now seeing an increase on the number of new listings coming into the market. Very interesting. Already 950. What does that mean? Are we going to cross 1,000? I don't think so. We're going to get very close to 1,000. How many price increases? 169. 169 price increases. More, well, it's the highest number since August 26. But why is that? That's because of September 30th. We know that builders like to increase prices towards the end of the month. Because, of course, what better strategy if a property is not selling than to increase price? But we know this. 89% of all of these price increases are new construction. They will increase the price $5,000, cause that, hey, prices are going up, demand is increasing, and then they'll chase the market back down. We know that they do that. That's not a big deal. But keep in mind, look at that. This was 227. This was 229. This is 169. So we're noticing less price increases right now than we were a few months ago. Let's take a look at price decreases. We are at 1441. That's not bad. 90%. That's the lowest percentage going all the way back to the end of last month. 1441 price drops. That means 90% of everything that went up or down went down. Now let's take a look at back on the market. We are at 175 back on the market. That's a low number, 18%. That is the lowest percentage we've seen going all the way back to June. 18% back on the market. Let's go to active under contract, 399. This is where you get to guess. 5 guesses. How many pendings? What do you think, you all? How many pendings? Let's get 5 guesses. Let's get 5 people to go ahead and guess. Melanie Price starting us off at 232 pendings. That is a good guess. Seth a little bit on the bullish side at 279. 2 down, 3 to go. Let's get a few more guesses here going. 250, Harold. 3 down, 2 to go. Let's go ahead and get 2 more guesses. 234, 279, through 250. Norma at a very bullish 350. I love the bullish nature of that. We've got one last person to go ahead and just type 3 digits. And I can read it off, and then we can go ahead and update this. Okay, Nikki coming in at 300. The number comes in at, 273. 273. That's going to put us at a 0.60 ratio. 0.60. What does that mean long term? Over the next 2 to 3 weeks, when we update all of the pendings, we're going to be closer to this. We're going to be closer to that 0.76, 0.77. I think we're going to be lower than 0.75, but that does put us very close to that tangible increase in inventory. More new listings entering the market, little bit less pendings, less properties going under contract. There's the drop in the ratio. And we can see that the rally that we experienced because rates went down all of a sudden hit a wall. Why? Well, we went 6.49, 6.46, 35. This is the interest rate 6.2, 6.09, 6.08, 6.12. So there's that reversal on rates. Now, this rate is not the rate that you can get today. This is the Fannie Mae 30-year average from over 300 lenders for a survey that's taken for the previous week. Every Thursday at 11 a.m. Central Time, Fannie Mae releases the average rate from national lenders over the past week. So it's a lagging indicator. And it catches us both ways. If rates are going down really fast, Fannie Mae is going to show a higher rate. If rates are going up really fast, Fannie Mae is going to show us a lower rate. But we can see that it went up a little bit, 6.08 up to 6.12. We're going to talk about what rates are looking like in our area right now today, because we are noticing rates going up. Rates are going up. And we're going to talk about that. So how do we compare? So already we have, let me go ahead and just adjust this just a little bit so you can see the entire thing. There we go. Already we have 73 more listings same week year over year. And the day's not over. We have 11 hours and 47 minutes left today. Wait, no, not 11, 13. 13 hours. We've got 13 hours and 47 minutes. 13 hours, 47 minutes left. And we already have an 8.3 increase on the number of new listings that came in the market same week, year over year. 6 less price increases, 376 less price drops. We do have 16 more properties active under contract. That's really encouraging. But so far, we've got 166 less properties that are pending. We're going to make up this gap. So we're going to end flat on the number of pending properties. Not double digit like 2 weeks ago, 88. I'd say it's going to be under 25 on the positive side. So we're going to have roughly 25 more listings going under contract when we revisit this number a few weeks from now. Now, the ratio, we are so far at a 0.60 ratio. Last year, we finished that week at a 0.77 ratio. Let us update the monthly data. And what I have to do here is kind of delete this because we're going to update October. Let me go ahead and just delete all this. First thing we're going to do is we're going to update the pending for the entire month of September just to see what all happened in September. We're at 1681, 1681. That's going to put us at a 0.77 ratio. Slightly better than August, which was 0.75 ratio. Let's go ahead and update August. Any pendings in August? 1857, nothing. Nothing changed in August. So for all of September, we ended at 3,691 new listings, 546 price increases, 6,285 price drops. That means that 49% of price drop to active ratio, 731 back on the market, 20% holding steady 2 months back to back, and 3,384 properties went under contract. Very, very interesting there. Very interesting. So let's go ahead and start updating October. October, new listings, 846. Oh, it's a big number. 846 new, it's only October 7th, and we've already had 846 new listings in the market. 134 price increase. Price drop, 1240, 90%. Slightly better than last month at 92%. So that's the best percentage going all the way back to March. Back on the market. Let's update back on the market. We are at 143 back on the market, 17%. Active under contract, 326. By the way, you all, let me just pause right here and talk a little bit about back on the market. The higher the percentage, the hotter the market. Counterintuitive. One would think that the higher the percentage, the worse the market. No. The lower the percentage, the more sellers are eager. So the reason why the lower the percentage, the better for the buyer. It's number one, the buyers are getting an upfront discount. So they're less likely to try to renegotiate, and the seller is more eager to negotiate if the seller took 3 months to get an offer. If the seller does not want to put their property back on the market, they're like, absolutely not. I'm not going to put my property back on the market. I don't care what the buyer wants. Give it to them. Well, when the seller is desperate to sell, they're eager to concede on negotiation. So the buyer's more inclined to stay under contract. And when the buyer is able to shop around for a longer period of time, they're more likely to find the product that they want to purchase. A buyer that, you go back to the crazy market that we had. Look at this. We got up to, 26% back on the market, 34% back on the market. Look at this, 31, 30, 26, 26. The hotter the market, 34%. The hotter the market, and look at the ratios, 1.22, 32%, 1.08, 30%, 1.29, 27%. And then the market starts cooling down, and look what happens to the back on the market. It starts going down. We went from a back on the market in the 30s, 30%. Go all the way up. I mean, you can see these numbers, 30, 26, 24, down to what? 15, 15, 16, 18. And then the market starts picking up a bit, 1.03, 34. Market cools down, back on the market percentage cools down. And we can see right here, back on the market starts going up from 17% up to 20%. And what happened with the ratio? The ratio went up, back on the market went up. The ratio goes down, back on the market goes down. That simply means that the sellers are eager and willing to negotiate with that property that's under contract. The buyer's happy. They feel like they got a good deal. And you've got less properties that come back on the market. That's what that means. Active under contract 326. Let's go ahead and update the pending. So far this month, exactly 200 pending. 0.53 ratio. So we're first 7 days of the month, we're at a 0.53 ratio. Wow. It's going to go up. We know it's going to go up. Chrissy, we're so excited to have a guest here in the call. Look at that. I'm telling you, that's just absolutely beautiful. If you're not looking at the video feed, that's just makes my day right there. I don't care how the market is.
Time. Tummy time right here.
Well, that's fantastic. Isn't that cool? That's just awesome. Love it. Absolutely love it. Cutie, that's what I'm talking about. Love it. How many sold so far this month, you all? We're looking at 540 sold. And let's take a look at withdrawn. We're looking at 208 withdrawn. And let's look at, 208 already. We're only 7 days into the month. 78 expired. So far this year, we've had 10,562 properties withdraw and expire. Let that sink in. 10,562 properties withdrawn and expired so far this year. That is just amazing. Let me go ahead and just move this off to the side so that I can print this out as a PDF and we can review some of the PDF. So just give me 1 second so I can convert this to a PDF so I can put it over our screen, look at some charts, look at some cumulative sold, and we can make sense of this market that we are currently experiencing. The joy of this market that we are absolutely loving. So it's just going to take a few seconds to convert this as a PDF, and I will then open this up for you all. Here we have it. Let's look at some graphs here. There's the weekly new listing to pending ratio. We can see this number is going to go up. Not too concerned about us being at 0.6. We're going to end at about the 0.73-ish, 0.75 or so. Let's keep on going. Let's look at the monthly. There's our 0.73, and let us compare year over year. And let's focus September, October. We're too early into October, so let's go ahead and just focus on September. 1,437 more active, 17 less new, 136 less price increase, 492 less price drop, 28 less back on the market. Here's the good news. On the pending side for September, we had a 6.9% increase in pending for the month of September. 190 less sold, but really encouraging. 217 more properties went under contract September of 2024 compared to September of 2023. Very encouraging. Those are going to become closed, of course, which is very exciting. Let's look at some graphs. Let's focus on this one right here. So we had 2 months in a row where the 2024 new listing to pending ratio was higher than the previous year. That is very encouraging, both September and August. I do not think we're going to end October over 0.77. I just don't see that happening. So I'd say that October, we're going to have a lower ratio than we had October of 2023. That's what I sense, but we're just going to have to wait and see. Active per 100,000 people for the month of October, we're at 498, 9.3% over last year, and we are only 1.2% below average. Cumulative new listings from January all the way through October, we are already 2.8% higher than we were last year. So far this year, 40,027 new listings hit the market. We are 11.4% above average. Back on the market, you can see that we are under average, below average for the month of October. Let's keep on going. Let's take a look at this one. Pendings. Only 526 pendings so far this month. When you look at the cumulative pendings, we are at 35,388 cumulative pendings. All pendings from January all the way through October. Really early into October, this number is going to go up. I don't see us having cumulative pendings more than last year. Even though September was a good September, we've got a lot of negative numbers to make up for before September. So we're going to be negative cumulative compared to 2023. Pendings per 100,000 people. Let's look at cumulative. We're at 1,409 cumulative pendings per 100,000 people. We are 26.8% below average when you look at cumulative properties per 100,000 people. And then let's look at cumulative withdrawn plus expired. We are slightly above average when you look at cumulative withdrawn plus expired, 4% year over year increase, 6.3% above average. And now we've got cumulative sold. Every single thing that has sold, 24,435 properties have sold so far this year. That is 10,000 less than 2021. Just let that sink in. 10,000 less properties sold, cumulative, from January, through October this year. 10,000 less this year compared to 2021. We're going to make up some of this because we're only October 7th right now. But how many properties do we think is going to sell this month? Well, last October 2023, 2,361 properties sold. I'd say we're going to be single digit negative this month. So I am forecasting 2,250 to 2,300. So far, we sold 540. So we've got about another, 1,800 properties that are going to sell. So we add 1,800 to this, and we're going to be 26,000. So we're going to be roughly 26,000 properties when it's all said and done. 34,755 sold 2021. Cumulative sold per 100,000 people, we're at 973. Are we going to beat 2010 at 993? I'd say we're going to get really close, but we're going to be slightly shy. When we update all of this first week of November, which is 1 month away, I'd say we're going to be at the 991 cumulative sold per 100,000 people. That is going to be my forecast. New listing to pending ratio for the entire year. So far, we're at a 0.77. Last 2 years, we were at a 0.83. I'd say we're going to end right around that 0.78-ish or so. So we're going to have slightly smaller new listing to pending ratio versus the past 2 years. Let's take a look at inventory. This morning, 14,554 active listings currently on the market. That is an increase daily of 33. A drop of 277 week over week, a drop month over month of 44. So we've got 0.3% negative active listings compared to exactly a month ago. Fascinating. Year over year, 3 days in a row where we've got 17.1% year over year increase. 3 days in a row, 17.1. That's just amazing. 4,018 pending. Good news. That is a 0.5% increase year over year. So we've got more pendings right now than we did a year ago. That's going to give us a 21.6% activity index, 5.19 months of inventory. There are your active listings. Down, increase, down. That was the changeover for the month. That's when we had a bunch of withdrawns and expireds. And it's going up by a tad. Pending. Very encouraging to see higher pendings this year compared to last year. I do forecast it going negative in the next 48 hours by a very small percentage. Very small percentage. But you can see that last year pendings went up a little bit and then it went back down. So we are going to increase. This is going to go up a little bit and then it's going to go back down. I do believe that we're going to be under the 4,000 pending in the next 2 weeks. Activity index currently at 21.6 compared to last year. This time last year, we were at 24.3. So we are down 11% on the activity index. For some of the guests and newer agents that we have here, activity index pending divided by active plus pending. That's what that means. Pending divided by active plus pending. Also a leading market indicator. Months of inventory, we're at 5.19. Last year, we were at 4.35. We peaked Monday, July 15th, 2024, at 15,503 active listings. We're at 14,554. That is a drop of 949 listings. Out of all the active listings currently in the market, 56.3% of those listings have actually had a price drop. When you look at the activity index along with months of inventory, you can see that we're slightly towards the colder side of things. And as you know, as the activity index gets colder, months of inventory, which is a lagging indicator, starts to go up. When we see these dots moving in this direction, months of inventory will start going down. But as of now, we are noticing more and more cities, more and more zip codes getting slightly cooler. Here's the zip code chart. And we can see that we're darn close to that 20 when you look at the average of all 75 zip codes. And we've got quite a few zip codes right there at 11 months. One approaching 11 months of inventory, but we are seeing this happen right there. And that's what happens. The inverse happens when the market starts heating up. When the market starts heating up, it goes down this way. More dots right here. And you can pull up all of these resources on teamprice.com. So if at any time you're interested on what these charts look like last year, you can go to Market Update. You can go to 2023. And let's just take a look at, really quick, let's just do it for funsies. Let's go to November 2023. And you can go to this really nice summary. And you can look at the activity chart. And there we have it. So this is for November 2023. Let's go to April 2023 and just take a look at it really quick. Oh, looks like we didn't have that chart April. So I'm going to let's go to June. Or maybe it was under activity index. It was probably under activity index. Oh, there we go. Perfect. We have this for June. And take a look at June. This was June 8th, 2023, and look at the difference. Look at the difference between this one and this one. As this line, the activity index, moves towards the colder side, months of inventory starts increasing, and you can see the difference. Way more dots up here around the 11, between the 8, and let me do this. Let me go ahead and just download this really quick as a PDF, so that you can actually see the difference. And I'll just go back and forth between the two charts so that you can see the difference. Let me grab that one. Let me find this one. Perfect. Here we go. So now look at the difference. See? Look at that. 2023, the average under 4 months of inventory, activity index over 30%. And then right now, months of inventory approaching 6, activity index approaching 20. Activity index leading market indicator, months of inventory lagging market indicator. So it's really nice having the historical charts available on our website so you can see what the market looked like in the past. Let's take a look at the bond market, you all. It is, unfortunately, not good news in the bond market. We are up 6 basis points on the bond market. The yield is officially over 4% on the 10-year Treasury. We had a very engaging conversation Friday on what does this mean? Why do we look at this? This is not a causation, it's a correlation. So take a look at our meeting Friday. Listen to our meeting Friday. We had a really engaging, Oliver had great questions related to this. We had a very engaging conversation around this. We did cross a repricing line last week. We've already had one lender reprice for the negative when you look at this resource, and we've got guaranteed rate repricing for the negative. Yeah, this is, we had a huge increase on Friday. It just skyrocketed up. We've got another increase today, 5.8 basis points higher. So what does that mean for rates? This morning, we did notice an increase. We're at 6.375 right now on conventional 30-year fixed. FHA still at 5.75. We're hoping that holds on, stays a little bit steady. But we are right now at a 6.375 on conventional 30-year. That's going to put more pressure on activity, more pressure on the market. And unfortunately, the data this morning certainly does not give us good news when it comes to rates. But what's going on with the data? Well, let's take a look at this morning. This morning employment trends index, a little bit less. Here's what's happening. A lot of the traders are looking at the data that came out on Friday. And they're looking at the job numbers here. And they're saying, okay, what's going on? Well, great, right? Amazing job numbers. Really, really good job numbers, 254. And then they look at this number and they're like, wow, that's just amazing, better than expected. And then they look at the details. They look at the footnotes. They look at, okay, where are these jobs located? Where are they coming from? And we notice a trend. We notice a lot of it government jobs, 31,000. A lot of it service sector jobs, primarily in the food industry. And a lot of it in medical services, right, which are basically government jobs. Like if you're in healthcare right now, it's a government job. Healthcare is privately paid for, subsidized by the government. It's government jobs. So a lot of folks looked at the detail of the report, and now that's causing a little bit of a added pressure within the bond market. So that's what's going on. Now, this is a very important week for rates. We've got a lot going on this week. Tomorrow, National Federation of Independent Business, Small Business Optimism. That's at 5 a.m. tomorrow. We've got Investor Business Daily, Economic Optimism. That's at 9:10 a.m. We've got a few bond auctions. We did have a bond auction this morning. Look at that, higher than the previous. We also had the 6-month bond auction, way higher than the previous, from 4.215 to 4.305. Because the 6-month bond auction happened this morning, guess what I've already updated? I already updated the cap rate resource. When you go to cap rate under the lease section, and you can see this was revised this morning, and I updated the 6-month constant maturity up to 4.491. What's it at right now? Let me see if it went up even more. Actually, it doesn't look like I have this on this one, but it is up by quite a bit, and that's why I went ahead and updated this. So now we have 6 zip codes over the desired cap rate. As this yield goes up, the number of zip codes will actually go down. That's what's going on. What else do we have going on? We've got a few FOMC members are speaking. That also tends to rile the markets a little bit. Let's keep on going. We've got Wednesday mortgage data coming out Wednesday, crude oil inventory, which points to the strength of the economy. That's at 9:30 a.m. on Wednesday. But the big one, Atlanta Fed GDP, I hate this. This is kind of worthless. It's preliminary and could care less what they say. We've got meeting minutes, very important. So on Wednesday at noon, we've got a 10-year auction. That's going to be very important. And then we've got the Federal Open Market Committee meeting minutes. Like, what did you all really talk about? Very important. But the big one's going to be Thursday. Thursday is all about inflation. We've got CPI and we've got PPI. CPI is going to come out on Thursday, Consumer Price Index. PPI, Producer Price Index, is going to come out on Friday. CPI is on the consumption side of things. Are we paying more for what we're consuming? And then PPI is the input side of things. Are the producers paying more? That will then make its way through the supply chain, that then the consumers are going to absorb the cost. So we've got CPI on Thursday and we've got PPI on Friday. What's my prediction on these? I think we're going to fall right in line with the forecast. What I'm hoping for is that CPI and PPI will be kind of blah figures. It'll be like, oh yeah, okay, we're at 0.2. Okay, month over month, we're at 0.1. Okay, year over year. I'm hoping to come in at about 2.2, but let's just say we come in right at 2.3. That it's either slightly better than expected or at expectation. And when that happens, and hopefully if that happens, we'll get a pullback. We will actually get a pullback. That it'll be like, oh, okay, well, inflation is actually taming down. We're continuing to see progress on inflationary pressure. All right, let's kind of do a little bit of a pullback on the yield, which means if the yield goes down, what does that mean? Well, it means the price went up. If the price went up, what does that mean? More demand for that 10-year treasury. That's what that would mean. That's what I'm hoping for. I'm hoping that on Friday into Thursday and on Friday, when we review this data, that we will see that this is the very thing that happened. That's what I'm hoping for. Keep in mind, we do not have a team meeting on Friday. This is the extended holiday weekend. We have Columbus Day on Monday. Title companies, by the way, oftentimes are going to be closed on Monday, so keep that in mind. Structure your contracts accordingly. But because it is an extended weekend, a lot of you all go on extended trips, go out to the beach, go to beautiful Galveston, enjoy the gorgeous Texas waters of Galveston. So that's why we call off the meeting on Friday. So we do not have a meeting on Friday. Keep that in mind. We are having our mentorship meeting tomorrow, 10 a.m. live in person here in the office. Please join that. We are having our Wednesday broker Q&A contract review training on Wednesday over Zoom, 10 a.m. And I will be publishing the stats on Thursday, but no meeting on Friday. And then on Friday, we've got PPI, core PPI. That's the input side of things. Michigan consumer expectations, sentiment. These are all preliminary. I don't really care about preliminary figures. It's like worthless. But, the market tends to look at that a little bit. But by the time these figures come out at 9 a.m., all the correction was already done. No one really is going to care about that. So important week. Very important week for rates. Very important week for the market. Lots going on. As you know, I will keep you posted. Let's look at a few more things within insight and statistics. I want to take a look at activity index city, activity index zip code, and then we are going to call it a lid just because we've got lots going on today. And I know that you all are like super, super engaged with your clients. Activity index, City of Austin, 18.3%, 5.08 months of inventory. The lowest activity index is for the Manchaca area at 5.6%. And we are noticing a few of them approaching that 10%. There's Lago Vista, 10.01%. Let's look at the historical. Austin, we were at an 18.7 last month. We're at an 18.3 right now. Slight pullback. We're now tied with July at 18.3, which was the lowest activity index. Which ones have we reached a low? Cedar Creek, 16.4. That reached a low. Dale crashing down to 9.3. Not as low as October 2023 at 7.5, but here's a 9.3. Driftwood, that's a record low for the past year at 10.4. We have, what else? We've got Pflugerville. Okay, so y'all be on the lookout for Pflugerville. We just hit 28.4% activity index in Pflugerville. That's going to be the lowest one for the year. That is trending down really, really fast. We were at 41.6 February. We're at 28.4 right now. Let's look at the details of Pflugerville. Let's really analyze Pflugerville, see what's going on. What price points are moving? What price points are not moving? Wow, this is fascinating. Price points that are holding us back on Pflugerville, we've got the 450 to 550 or 450 to 500, 18.6% activity index. So that price point hit a wall. We've got the over 700 at 17.4. That also hit a wall. We've got a slight decrease on the 350 to 400, 25% activity index. Look what happens between price points. 450 to 500, 18.6. 500 to 550, 37.1. Almost double the activity compared to a cheaper price point. Really interesting. But if you've got a listing coming on the market in Pflugerville, you've got to be cautious because we are noticing the activity index going down so fast. Big pullback within Pflugerville hitting a record low activity index. Let's take a look at zip codes really quick and see what's going on with zip codes. But before that, let's look at months of inventory. What is going on with inventory? We've got Austin, slight pullback on months of inventory, 5.08 versus 5.31 the previous month. And let's keep on going here. Let's look at zip codes really quick. We're going to go back to activity index, and we're going to go to activity index on zip code. 01 is struggling. 01, just not seeing a dramatic improvement in the 78701. That's a tough zip code right now. And you can see 5.7% activity index in 01. Really amazing. 13.3 and 2.5, 11.5 and 2.6. So we're noticing a lot of zip codes that are close to that 10 to 15% activity index. Be on the lookout for new construction versus resale because you can see that certain areas, let me go up a little bit, look at 78748. 1.5 months of inventory on new construction. Not many though, only 3. Let's look at some of the burbs. This is interesting. 78645, you have a better activity index in resale versus new construction. We don't see that often. Oftentimes, you're going to see a better activity index in new construction versus resale, not in the 78645. Well, what does that tell us? If you've got a client looking at new construction in the 78645, they're going to have a lot of leverage with pricing on new construction because 6.5% activity index on new construction. That is crazy low. Very, very low. Let's look at a few other ones. Wow, Georgetown. Same thing with Georgetown. You've got a better activity index in resale than you do new construction. Folks are not pulling the trigger on new construction in this area. And then you go to Jarrell, of course, look at that. Jarrell, you've got close to double the activity index on new construction. Real estate is hyper local. So you can't say, oh yeah, any new construction, better activity. No, that's not what the data shows. Georgetown, 78633, you've got more leverage on new construction as a buyer. Lower activity index, almost double or more than double the inventory on new construction compared to resale. Resale is moving, new construction not so much. Let's look at some historical. Have we hit any lows on activity index, and if so, which zip codes? Slight improvement on 01, not by much. Still at that 5.7, we were at 5.3. We got down to 4% January. 05, we just hit 15.6. That's a low. 23, 19.8. That's a low. Here we've got 26, 3 months in a row at 11.5% activity index. We've got 3.2, Steiner Ranch area hitting 11% activity index. That is very low for that area. We were at 31.5, and you can see how fast this has gone down. Same thing with 3.6, 14% activity index. We were at 34.6. That's a big drop right there. So we've got any record highs. 3.9 is approaching a record high. We were at 48.2 March. We're at 47.1 right now. We've got 4.7. That just hit a record low. Okay, well, here's 4.7. Once again, if you got a buyer in 4.7, you've got a lot of leverage. You've got some opportunities for price drops. You've got a seller in 4.7. You're chasing the market down right now because activity in 4.7 has just about overnight hit a wall. So on the listing side, you've got to be aggressive on your pricing. On the buyer side, be aggressive on your offer. We've got 4.8, half of the activity index compared to January, February, March timeframe. So that's another record low. We've got 5.9, Great Hills area. Same thing, a very fast drop within the Great Hills area. 4.5, Leander. That just plummeted. Just amazing. Florence, we've got another 0 activity index, which means not a single property is under contract. Okay, we've got Seth said, I have a seller in 4.7 and I told him we need to wait until January, February. Let's go back to 4.7. Yeah, there we have it, January, February. That's the peak right there. Really nice activity. And it just plummeted. I mean, Seth, not many properties under contract in that zip code right now, right? It's really amazing to see it. Really amazing. Not at all, and pricing dropping so quickly. Yeah, there you have it. Well, let's go back to 4.7 and take a look at what's going on within each price point. Oh, wow, look at this, y'all. Fascinating. 250 to 300. There are 1, 2, 3, 4, 5, 6 properties currently on the market under $300,000. Not one under contract. Not one. Isn't that amazing? 500 to 550, we've got 4, 7, 12, 13. 13 properties on the market. 5 to 550, 0 pending. 0 pending. 0 pending. And then you've got a very attractive price point, $350,000 to $400,000. You've got quite a few properties on the market. You've got 10, 19, 20, 21 properties currently on the market. And you've got only 12.5% activity index, which is under the average for that entire zip code. Just amazing. Yeah, it's a right call. The advice you gave your client, I cannot argue with that advice. Hey, we're just going to have to hunker down and we're going to have to wait a little bit. Do not disagree with that advice at all. And let's look at inventory right now. 01, this is amazing. Only 2 months out of the past 11 months have we had less than 11 months of inventory. So let's look at any record high inventory. Doesn't look like we're hitting any record high inventory. Oh, I need to fix that. I don't know what happened there, but I need to fix that. I'll definitely correct. I don't know what happened here. Something happened to the formula. It'll be fixed by the end of this call. Don't worry about it. Really, really fascinating. Let's look at type of market. But what I want to do is I want to look at type of market on the leasing side first, and then type of market on the resale side. Because the type of market on the leasing side, we now have 3 zip codes that are neutral market and 1 that's actually in a tenants market right now. 1 that's in a tenants market, more than 5 months of inventory. So let's take a look at which one has more than 5 months. We are looking at Driftwood. Driftwood has 11 months of inventory right now on the leasing side of things. So now let's take a look at type of market on residential, type of market city, and then we're going to take a look at type of market zip code. It's 1057, and we are then going to call it a lid. And here's type of market cities. Out of the top 30 cities that we track, 16, 53% are still in a seller's market. 8 are in a neutral market. 6 are officially on a buyer's market. And let's look how many of them are close to that transition line. We're not going to see any really over the past 2 weeks. We're not going to see any of them jump into the buyer side. What we are going to see are 3 cities. We're going to see San Marcos, Liberty Hill, and Elgin transition into the neutral market side of things. We're not going to see Wimberley go into a buyer's market. That's not going to happen. Too early for that. Now, let's take a look at type of market zip code. Let's go back here a little bit. Find a type of market zip code. Let's make this a little bit bigger for you so that you can see the entire thing. Adjust my screen. Out of the top 75 zip codes that we track, 40 are still in a seller's market, 53%, 18 in a neutral market, 24%, and 17 in a buyer's market at 23%. How many zip codes are going to transition to a buyer's market? I don't see any of them over the next 2 weeks. We've got too big of a gap. So we've got 78702 as 7.11, 78756 as 6.4. Not enough time to transition into a buyer's market, but we've got a lot of zip codes close to a neutral market. We've got 45, 58, 32, 25, 47. I would even go with San Marcos 78666, and I would even add Round Rock at 78664. All of these zip codes right here, all of these are at risk over the next 10 to 14 days of jumping that dotted line and moving into neutral market territory. When you look at the activity index for all these areas, what are we noticing? A drop in the activity index, leading market indicator. Therefore, what's going to happen with a lagging market indicator? Well, months of inventory will have to go up. The only reason it wouldn't go up is if we see an increase in expireds and withdrawals. We're not going to see that until December 31st. We're seeing the opposite right now. We're seeing people putting their homes back on the market. So we're not going to see this massive drop in the months of inventory until we go from December 31st until January 1st. That's when we see a lot of withdrawals, a lot of expireds, less listings on the market. Therefore, months of inventory goes down temporarily, and then it starts picking back up again. That's what happens historically. Y'all, it is exactly 11 a.m. We want to make the absolute best use of our time here Monday morning. Are there any questions, comments, concerns, criticisms, or complaints? Any questions? Really fast-paced Monday morning touch point, get you ready for the week. Be obsessed with data when you're working with buyers, working with sellers. Be absolutely obsessed with data so that you can give your client a fact, not an opinion. That's what we're going for. We want to provide our clients with factual information, not with opinions. Last chance. Any questions, comments, concerns, criticisms, or complaints? Going once. Going twice. All right, sold. Thank you all so very much for joining. Super appreciated. Do not forget mentorship meeting tomorrow morning, 10 a.m. live in person here at the office. Wednesday, broker Q&A, contract review, which, by the way, make sure you check your email. I sent you a contract proficiency challenge for the week, due Friday, 5 p.m. It's going to be a good one. We've got buy down language. We've got all kinds of things on that contract proficiency. As rates are inching upwards, as more opportunities are available on the market, clients want buy downs. Well, let's do buy downs. Let's create a contract that has a buy down language. So we're going to talk about that. Also, a very interesting scenario, $80,000 down FHA loan. Why is that? Why in the world would a buyer put $80,000 down and get an FHA loan? Well, we're going to talk about that. So be sure to do the contract proficiency challenge for the week. You've got to have perfect contracts. Clean, complete, legible, enforceable, acceptable, and neat. My challenge for you is just to take those seriously and do the contract proficiency challenge. Thank you all so very much for joining. Let's go ahead and end with the last bond market update, up 7.1 basis points. I hope we don't cross that repricing line. That would mean that rates would actually go up slightly. It would, it hit 6.5. If we cross another repricing line, we could very well be at the 6.5 for the conventional 30-year. We're at 6.375 right now. If you do not have any questions, comments, concerns, criticisms, or complaints, thank you all so very much for joining. Super appreciate it. I will see you tomorrow morning, mentorship meeting. Have an absolutely amazing rest of your day. If you have any questions or if you need anything, please reach out. We are here to help.